All right, welcome up, guys. Thank you so much for IBCers, Kyle, Jack. Thank you for joining us here today. So, guys, as always, we're creating these videos to help enhance you, okay, with your cash value life insurance, your IBC that you've been participating in, and gang. At this end of the day, we want to give you the tools, we want to give you the mechanisms, we want to give you the how-tos, the strategies to be able to benefit you, basically, with really to empower you, because you don't know what you don't know, and information is key with this, guys. So today, today we wanted to kind of talk about, you know, the uses of infinite banking and the how a little bit of the how tos of what you're doing with your money, why you're doing it with your money, and the experience we've had. And so, guys, what are some of the things, the reasons we do this whole infinite banking thing, and why are we doing this with our money right here? Kyle, you want to take it all away first?
Sure. I got into the concept because I was so intrigued by the question, can you use your money in two places at the same time? And obviously, I thought the answer was no. Now I know the answer is like you can do it up to nine times if you get really tricky with it. But that was what was most intriguing to me about this concept, and something that I had wish I had known before I then tried to apply it was just the startup time that comes into play. Like I was like, all right, I'm gonna throw my money into this life insurance thing, and then I'm gonna take a loan against it, and I kind of understood that that meant the account's still earning, and then I can now utilize this capital for something. And just to be personal, like our first use case was we sold our first home that we had bought together, my wife and I, out in the country, and we had a chunk of change from that sale, and we were going to go buy a house in town. And we needed to do a couple different things. One was we needed to renovate the house, and the other thing we needed to do was actually pay off one of our vehicles to get our debt to income ratio where we needed it to be able to get the amount down. I won't bore you with the details. But I was like, great. So I've got this cash, I've got this life insurance thing. I went into underwriting, and underwriting then took a little bit longer than I was anticipating. And that was kind of like, oh, okay, got it. That's fine. And then I paid into the policy. That took a couple more days than I was expecting that it was going to take. And I didn't realize that this isn't like a transaction in a bank. It's not like I just moved this money from this account to that account. It's like I'm actually setting up an insurance policy on my life that has all these other, bells and whistles and features, and they need to know that I'm like healthy, and there's all these other kind of factors at play. And so it took a lot longer than I anticipated to get the money back out and get the loan back into my account. But I was pleasantly surprised with the experience on the loan when it came out because it hit my account as cash, and then I was able to use it. Obviously, as a reminder, people probably already know this, but it doesn't count against your debt to income ratio to have a loan against a policy because it's considered completely cash back. So the money to fund that to back that loan is there 100%. And so I was able to take the loan, didn't count against my DTI. We bought the new house. And our two use cases was one, we paid off a car. And when I paid off the vehicle, I actually, because we had already had the discipline of making that payment every single month, I just went into the portal and I set up an automatic reoccurring payment for that same amount to my policy. Um, that was a really helpful exercise to do just as a young agent and as an individual who's learning how to use this process. It was nice how easily I was able to set it up and then set and forget that that payment's now just going to cash value. And it was just repaying that loan that I had taken for the vehicle. The other thing that was hard to wrap my mind around as I was going into the use case was that I couldn't put all of my money into my life insurance policy in the first year. I wanted to just sink the entire account in. I was so excited about this concept. And in the end of the day, a good friend of all three of us here on the call, Jonathan Wield, talked me down to like between 25% and 30% of what I had to be safe with what I was setting up. And so that was also kind of just a learning curve. And so I think that personally, like looking back, if I could sit down with Kempy and have a conversation with him before selling the house, I'd just be like, hey, this setup and this whole process and like running everything through here is going to take a little bit longer than you anticipate. Start it sooner than you think you need to so that you aren't having to wait on one thing or another from a life insurance carrier when it comes to moving your cash and applying it to those two different use cases that you're going to use it for.
Yeah,
Yeah.
I love that. Jack, how about you, buddy?
Yeah, I got into this because I think I realized the path that I was on with funding a 401k, funding a Roth IRA, having a small brokerage account, specifically with the qualified plans, like that money was growing for one purpose, to be able to access it post 59 and a half to replace my income. And that felt really far away. And market timing felt out of my control. Those investments felt like stuff I couldn't influence. So what stuck out to me about cash life insurance and infinite banking concept was, wow, if I have more access to more of my money, I'm going to become aware of opportunities and places to put that to work that might be able to create the income streams quicker and with less that a 401k can when I'm age 60 plus. Um, and yeah, one of the first things I jumped into was my wife and I also bought a house. We then renovated kind of a separate studio to Airbnb and furnished it with a policy loan. Some of that first rental income from that we used to pay back that policy loan. Probably four or five other small investments, of which maybe half of them panned out and was able to like pay back policy loans just from the investment. But when we actually sold our house, made a lot on that, was able to pay off all the loans. And then currently I'm in two smaller syndication deals with policy loans. The one purchase that I've made, excuse me, is buying my dad's old truck that is just one of our family vehicles now. But I definitely have a preference for investing from my cash value to get multiple returns, kind of as Kyle referenced, like earning on the gross cash value and also on a separate rate of return on another asset that I've invested in. Um, and I will say I've grown more conservative as I've had my policy too. Like I like keeping an emergency fund buffer in my cash value now, not maxing it out fully. Because yeah, over the long term, it's definitely a better place to store an emergency fund than even a high yield savings account that's going to fluctuate from 1 to 4% depending on the interest rate environment. So that's kind of how I've put mine to work. I've now converted my wife's term policy to an IUL. I have a whole life on me, have a couple policies on two of my kids. I have another baby coming that'll add to that system of policies. But that's kind of how I've put it to work and why I jumped into it.
Yeah, I like that because, and Jacka, what I like is you kind of brought in the whole family element to this is because, at the end of the day, you know, we're affecting our families and, this whole, family banking, infinite banking concept, can really affect our families. And, so for me, my kind of step towards this was my parents, my mom passed away in 2017. And then, in 2020, unfortunately, my dad passed away. And so there was this whole liquidity event kind of taking place in my life because of my dad, doing very good with his money and, not having any debt and so forth. So I needed somewhere to warehouse all that money until I knew what to do with it, quite honestly. And I didn't know anything about, that you could utilize insurance, like permanent life insurance, and overfund that at all until I actually talked to a gentleman named Ryan, who actually does work at Unbridled, and he introduced it all to me. And I went down the rabbit hole of discovering, holy cow, this is what the wealthy do. This is amazing. I didn't know anything about this. I didn't know that, golly, the Rockefellers did this. I didn't know that this is how Walt Disney got, even one of his businesses started up, by borrowing against his life insurance policy. I had no idea. And so when I took the plunge and actually started put a good chunk of money into the policies that I'd been approved for, all of a sudden I was like, okay, I've got all this money sitting over here, and I'm quickly learning that there are things that I need to do. I was like, I'm starting a new business. That was just my mindset, and that
Mm.
I really needed to have a business owner mentality of starting up this of because, and again, I know I apologize for kind of belaboring this, but I'd been on both sides of the spectrum kind of in our society. You got the save, don't get into debt, you know, live way below your means. And I did that for many, many years where everything I did was paid with cash. And I was totally good with that. And I praise God that I actually did that for a good little while. It made me very disciplined. But then I was like, okay, now I've got all this money, kind of set aside. I need to do something else with it. I need to go and what I like to call make little baby monies. Right. And so I looked at, the whole, I can use his name, Robert Kiyosaki's side of things. Okay. Which you leverage yourself way out. And so I started looking at those avenues and actually kind of went down that road, and I didn't really like that so much. So I kind of backed off that. And then all of a sudden, whenever I found this concept, this is kind of a little bit out of that happy medium for me,
Mm.
where that I was in control. It was based upon an asset called me, right? And I determined what event I was going to say take an opportunity on. Like one of the first things I did was my wife needed a new vehicle. And so I was able to buy her that vehicle through my policy. And yeah, we're still paying that off, but it is not at nearly the high of interest rates of what I would have had. Okay. Um, and on top of that, what really made me excited about it is guess what? The cash value inside the policy is still growing. I like that. It was something I never thought that I could actually have do this opportunity over here and then still have it growing over here. That was such a wild concept to me, and that attracted me to it. And yeah, there's nuances to all this that I didn't know about, but at the end of the day, I sure am glad I'm here. That makes sense, guys. I sure am glad I'm here, and the reason why I'm glad I did this, and I guess I know that that's why we are passionate about wanted to teach people how to do this right here because we've done it. I mean, we're not. This isn't like something that we've never done before, or we've got this theory about. It's like those college professors that are really smart in college, but they've never owned a business and they're teaching business. I always hated those college professors. I'm like, you have no concept, but we do. And yeah, so, but Kyle, I wanted to go back to your thing that you kind of talked about with, you know, and Jack as well, like why you taking advantage of opportunities, because obviously there's something that happens when you start doing this, the opportunities start to arise. How are you kind of navigating that as far as the opportunities whenever you're going after that, Kyle?
Yeah. I love the way that you just phrased everything you said in the last few minutes because it's reminding me of one of the reasons I came into this. And one of the adverse effects to starting the infinite banking thing for me was it changed the way I thought about money. I
Mm,
actually met with one of the founders of Unbridled Wealth after 8+ years of owning the company and doing this at a scale volume that I would love to be at someday. And I asked him, like, what's like if you could try to put your finger on like the single like benefit that you really feel like top the rest? You know, is it the legacy play? Is it like, you know, you've got your money in two places, like what is it? And he said it's the way that it changed the way he thinks about money in every other area of his life.
Mm.
And to answer your question about the investment opportunities, like that's probably the answer. It's changed the way that I look at investing and I look at opportunities, because it does put in a layer of responsibility that you don't have when you're not leveraging money against your own cash. So if you take a loan against your policy to go into a new investment opportunity, you're going to vet that opportunity a little differently than you would have if you were just taking cash in your savings and putting it into an investment opportunity, because you're saying that my money's here is growing over here, but now I have a loan, and that loan is to somebody more important than anybody else, which is my family. It's to us. And so I'm going to make sure that where I'm investing this capital is going to get me the return that I want to see to be able to qualify it for my purposes. And so, yeah, it's totally changed the way that I approach an investment opportunity. I look at things maybe more intentionally and more aggressively, like from the get go. I come in with like, I know what I'm looking for. I need to hit these markers. I'm sure every investor has those types of things, but I see you guys nodding, so you understand that there is this like it's a weight. It's like another level of like, I loved how you said it. It's a new job. I put on my banker hat. Like I just became banker Kyle. This guy is in, you know, his job is to take this capital and grow this cash. And I'm going to do that in the best way that I know how, with the opportunities presented to me. So I don't know if that fully
No,
answers your question. I'm not giving you a
no, it
specific
does.
investment opportunity, but
No, I don't think that, you know, obviously each person's got to do their own investment, you know, kind of thing, because I know I even myself. But one of the things I wanted to go back to that Jack mentioned that is such a just a different mind shift. And this is again why we're doing this, is to help our clients and our, you know, prospective clients to shift their mind for these things. And Jack, you alluded to, you know, 401k, you know, those types of things that are really heavy in our society and are, you know, quite honestly, I mean, when I was in corporate America, you had to be investing in your 401k or whatever. And, you know, I want Jack for you to kind of riff a little bit on that, if you don't mind, about why that this is different what we're doing.
Mhm. Yeah. I mean, it's interesting because cash value life insurance, it's going to accumulate over time for you. It'll grow probably 4 to 6% over your lifetime, internal rate of return. And when you actually compare it, like you add on a 25% tax rate in retirement and 1% management fees, you'd actually need a close to 8% return in the stock market every single year to match the return of your whole life policy, which whole life is not an investment. It's a savings vehicle, a bond alternative when you look at it as an asset. Um, but the ability to have something that will accumulate and become a significant amount by the time you're in your post work years, but also use it along the way to develop other assets for your family, create additional income streams. That to me is like, that's what creates a vibrant life. Like to be able to access your money and open your mind to like, what are my skills? What's my capacity? What is my family after? And then sync up with like starting a business with someone around XYZ, using a policy loan to invest in some initial equipment, or yeah, like the real estate syndications I mentioned. Like I got young kids, you can't run back another Airbnb renovation. That was very hands-on. So I like more passive plays right now that multiply my capital over 3 to 5 years and create some quarterly payouts along the way. Um, so yeah, like it will change depending on your life stage, but having the policy be this opportunity fund that you can access will just open far more doors than the traditional route will for you. And I'm not saying don't do that. There's certainly a spectrum of where people are at entrepreneurially, wanting to invest alternatively. But I think there's a place for everyone to have permanent life insurance in their plan, because even when you get to retirement, that helps your qualified money last a lot longer by being a volatility buffer that you can draw from in down years. It's the best type of inheritance to leave to your kids because it's tax free. No one wants to inherit a 401k that they have to draw down and pay ordinary income taxes on over the course of 10 years when they're in their prime earning years. Like, I'd much rather get real estate and a death benefit. So that's kind of like, yeah, what I'm driving towards with family legacy too.
I love it. I love it because I like one of the things I like a big thing that you said in there is, you know, this whole private banking, family banking thing that we're doing here is not, it's not an investment vehicle. It's not, this is a asset. This is something, it's a strategy that we can use. Yeah, still do your 401k or still do, you know, your Roth IRA type stuff, you know, because look, I mean, I know you guys all believe the Bible. I believe the Bible. It talks about having 7 streams of income. So I'm all about that, you know, and you need those things. Okay. But this right here gives you the control of what you want to do with your money and how you want to dictate your money without having to quote unquote lose your money. All right. Or actually having to build back up that savings account that you just dwindled down. Okay. So, all right. Well, I want to land this plane real quick here. Guys, I think this has been a great conversation. Um, Kyle, let you go first as far as last minute thoughts, and then Jack, you can, and then we'll land it. Okay.
The what you made me think of as we were talking through this is that this is a financially complex, sophisticated tool to respond to a financially complex, sophisticated society. Like,
Mm,
I was talking to a guy one time and he goes, "This is really complicated. You're putting this in front of people, you know, and you're adding complication and complexity to their already strat. I believe in keeping it super simple." And I'm like, "Yeah, and you also believe in controlling the knowledge. And so you're going to be the complex, like sophisticated individual in their lives, which I disagree with on a core belief level, like just values level, not belief, but core value level for me. I want to give somebody else what I didn't have when I was a kid, like this sense of just control, power. Like, I can learn how to do something. If I see something that doesn't make sense to me, I'm going to go figure out what that thing is and how to do it. And so I think adding this piece of complexity to your financial situation is in response to you're surrounded by financial complexity and it's designed to take money away from you. And
mm,
so the system that you are growing up in inside of the US, like you may or may not realize, but like Jack just like hit on a whole bunch of things with the 401k. Like that isn't widely talked about, or people don't understand that before they start their 401ks. What's explained to them are the selling points for that product, and then let's go buy it. But it's not to pick on 401ks. I feel like this is everywhere. It happens when you buy your first car and you take a car loan out. You know, you're sitting there and you're like, walk out of there and you're like, I feel like that guy has my identity now. Like he just ran circles around me and I don't know why I bought that warranty. And you know what I mean? It's just like there's all these financial sophisticated complexities in our culture designed to take money away from you. I think it's time to put financial complexity back into how you operate your money to get money coming back to you and
mm,
controlling those underlying currents beneath the boat that look like taxes and compounding interest, and just adding layers to how you use money so that it's going to work towards your legacy that you're either hopefully setting up for kids, but even if you don't have a family, setting up for somebody else so that you can continue to be a person of power and influence with your wealth.
I like it. What about you, Jack? Any last closing comments?
Yeah, just to touch on like how this changes your mindset. It does add some complexity, but it's really just changing the flow of your money. Like, where do your dollars go first? Where do they reside? before they go out and accomplish all the other jobs that you have for them. It's a lot like why we use a credit card. Like we want to pick up points and travel protection and develop a good credit score. Like it does all these additional things for us that just a checking account doesn't. Same thing with a life insurance policy. We pick up creditor protection. We pick up a permanent death benefit. There's some long-term care features to it. We're getting better growth than we would in a high yield savings account. And yeah, and then like the big picture why is there's a great Nelson Nash quote. He says, "You finance everything you buy. You're either paying interest to someone else or losing out on interest that your money could have earned." So with the cash value of a policy, you're honoring your original savings dollars ability to grow your whole life while still having access to them, borrowing against it when those opportunities come along, and paying a small interest rate to the life insurance company while your money still grows. So that's what this is all about. It's just a small shift that opens a bunch of doors for you and your family to thrive in ways that you probably couldn't if you didn't have access to the majority of your dollars, like most Americans. It creates margin in your life too. Like that's huge. Like most people can't even cover an emergency. Like to have an emergency fund residing in a life insurance policy that also creates $1 million death benefit for your family that will pay out, unlike 98% of term policies. Come on, man.
I love the passion, Jack. I love it, man. All right. Well, hey guys, thank y'all so much again for, y'all's input. Because I really feel like that this will be a benefit to, you, the end user that's listening to this right now, wherever this finds you. If you're cutting your grass, if you're, on a treadmill or wherever you're at listening or watching, we just want to add value to you. We want to add value to your experience that you're already using, your permanent life insurance policy to do infinite banking or family banking, whatever you want to call it. Or, again, you're kind of curious or you're actually in the process of actually looking at doing this. Again, we want your eyes wide open and we want you to make an informed decision. So that's the reason why we're doing this. So, guys, thank y'all so much. And I'll call that a wrap.